In today's video, I will teach you how not to fall for the common traps that even seasoned investors sometimes miss. Any upward gap might seem like a beacon of hope, but we'll show you why it's often just a mirage created by institutions looking to offload their positions. We'll explore the critical moment when a slight green can quickly turn into a significant red, and why your timing in this phase is crucial. Our focus will be on understanding the dynamics of market movements, particularly during RBI events, and how you can leverage these for your benefit.
Just a bullish euphoria into the open. And this is what I don't want you to fall for. We're in the throes of a bear market. Any gap up, or most gaps up, are going to be used by institutions to liquidate more. They might let it go green a little bit first, and then they start piling their sell orders into that green. So that's a typical trap in a bear market. But we move up first, okay? Producing just a little bit of green, and then that green, boom, disappears. And this is in the first few seconds, okay? Now, if Baba is one of your plays and you're watching this, you're going to watch Baba. Let me do it like this here. I'm going to show you here. You're going to watch Baba grow in redness. Now, I'm going to do this segment by segment to give you the blow by blow here. All right. So once that green disappears here, boom. Green bar first, boom. Green bar disappears, leaving behind a little bit of a tail, and boom. That is where you can strike. You can strike right there. Boom. Keeps your risk relatively controllable there with your stop 1 penny above the high. Now, it is at this point that you want to make sure that the gap up is high enough above the next major area of support to make shorting the gap up reliable. All right? You want to make sure of that. All right, so what I mean by that is, where's the next level of support? Well, I would say it's all the way down here near your 200 period moving average. So there's your next level of support area. Now, a quick and dirty guideline is if you split the space between where you're shorting and the first layer major area of support, if you basically roughly cut that in half, is that a decent enough gain? Now, you got to ask yourself, it's a good chance that it's going to go past that. But if it's like, maybe it's not high enough. All right, that's a quick and dirty guideline. Anywhere between half and 2/3. It's really this zone, half and 2/3. We're going to zone that out. And so, all right, it doesn't, that short doesn't light up the world, but it's still takeable. And so a number of my traders took this. Now, I take the trade short there. Boom. We're moving into deeper and deeper profitability in the first bar. Now, there will be oftentimes a strong tendency to take profits if your first bar is big profits from your entry, like this one is fairly decent profits. I want to beg you to try to resist profit taking in the first bar. I don't care how much profits you have. Try to resist taking profits in the first bar in a bear market. It's the same. The same is applicable, traders. The same is applicable in a bull market when you're playing a bull elephant bar scenario, where you want to resist taking profits on that green elephant bar if it's even big as the first bar. The follow-through rate in a bear market, the follow-through rate of a solid, fat, violent bar actually goes over 90%. So if you're taking profits, you're giving this up. Tell me you understand this. You're giving the best thing. There aren't many 90% things out here for us to be playing. You're giving that benefit up if you take profits on that first powerful, violent bear bar. You're giving up the greatest gift, one of the greatest gifts we have. All right? So please do not try to resist. If you get big profits in that first bar, sit on your hands, because the 90% is after the first bar. 90% you see, 90% of the time you see more. Don't give up the more. Okay? Now, someone's saying, Oliver, can we adjust to break even? Yes. I'm okay if you get this monster profit in the first bar and you're not going to take profits. You're going to hold. You're going to sit on your hands. You can go to break even. I am okay with that. Boom. Break even. Stop. Now you're playing with the house's money. There's something else I want to tell you about this type of trade. So you've gotten in here. Your stop is here. At this point, yes, you can go to break even. Break even. Stop. Okay, good. You're playing with the house's money now. Now let me do this to give you that blow by blow scenario first, right? So there's the possibility that after that bar, you do get some type of move back up the bar. I don't want you to be afraid of that, because some of you have been with me long enough to know that I wish for that. I want that move back into that power, because I'm going to be shorting more of it on any move up. Do you understand? So I'm not afraid. I don't want you to be afraid of some knee-jerk reaction back up after that violent bar. That's okay. Very few climb all the way back to the top. Very few. It's not impossible, but very few do. All right? So there's that possibility you're going to stand your ground, or, like me, maybe even use it to your benefit. Okay? Okay. Now, here, we don't get the pullback in the stock. We get the follow through in the stock, which is cool. So we get the follow through in the stock. Boom. All right. Boom. Now, because we're in a bear market, when you're shorting, you should be going for 3 pushes. However, if you are playing a short against the position, I'm okay with you taking profits on 2 pushes. So what I mean by that is if you're under everything, I want you going for 3 pushes all the time. If you're over everything, you're playing against position in a way. So 2 pushes is acceptable, but I wouldn't do more than half on my second push. Don't take the majority on 2 pushes because you're playing a short, even though it's against the position, it's with the monster flow of the market, which is bear. All right. So I would only take up to 1/2 of my position on 2 pushes. And I would consider, okay, here's a profit take and there's a profit take. When you get fluidity in a series of bars, what I mean by that is fluid bars that are near perfect. This bar is near perfect. It's hard to draw a bar, a violet bar, more perfect than that. This bar is near perfect. It looks like I drew it for one of my presentations. That's how perfect it is. This bar is perfect. Now you can ignore these neutral hiccups in between. They don't really mean anything. You see? But look how perfect the fluidity is in the bar. All right? That's what I mean by fluidity. It's near perfect. Got a little wick or little tiny little tail at the top, but for the most part, they're perfectly drawn bars. These are all one bar in your mind. So I want you to take this fluidity and create one bar in your minds with it. We can ignore that green one. Understand? Now, let's look at this as one bar. Now, here is the mistake made by a couple of my traders this morning, where they're trailing out and they get out of the play here, which is, as you know, I'm actually thinking about getting back in. This is a dead cat bounce against this power red wall, this power red drop. That bounce is temporary. That is setting up another opportunity to get all the way down to the support, because we didn't quite get to support, did we? No, there's still room left to support. There's that 200. And so instead of killing the trade here, I want you looking for the next color change. Boom. Next color change is right there. And whale complete. Whale complete. So the two things that I wanted to harp on with you today, they're almost the same. They're identical. I don't want you to get shaken out of plays that bounce next to violence. This is a bounce next to violence. All right? That's an opportunity. here's a violent bar. If there was a little bounce here, I don't want you getting afraid because you're next to violence. That is likely going to be an opportunity. I don't want the opposite color scaring you next to violence. That violence can be in the form of one bar, or it can be in the form of a fluid move that is comprised of multiple bars. You don't have to do what I do, which is short on the way up, because you're not playing that kind of size yet. You have a greater advantage than I do. You can wait to pick the precise moment, which is that moment right there.